Welcome out to another Trading Justice podcast. A lot to discuss this week. Markets are consolidating, ready to make a move in one direction or another. Lots of news flow, lots of interesting stocks in the news. We're going to break down Nvidia earnings. We're going to basically play legal analyst on the ongoing tariff situation. Going to break it all down. It's going to be a real fun podcast. I got a game for Matt at the end. Stock it or drop it. It's going to be lots of fun. I'm excited to pick Matt's brain on a lot of different things. And I had a pleasure of listening to Matt this week on the 7 Steps Guide webinar that he did, where he discussed the importance of routine, the importance of having a systematic approach to the market, Matt. And I called you up that night. And, you know, when I hear you speak and teach in these settings, I always give you this like sincere compliment, like, you know, just brother to brother. I say, Matt, you just do an amazing job teaching. And I thought you did a great job. You know, talk about it and talk about some of the upcoming events that you have.
Yeah, first of all, I do love to teach, and so I'm always happy when people enjoy the education. There's no doubt about that, and we had a great webinar this week on the 7-Step Guide to Trading. If you did not have a chance to attend that, you can always go to the live events page. It's in the link in the description below. Hit the watch the replay, and you can go ahead and watch that 7-step replay. It's right there on the live events page, and while you're there, well, get registered for the upcoming Master Trader Pro course that we're going to be doing on June 9th at 7 p.m. Eastern Standard Time. Yours truly is going to be teaching that. And if you like the 7-step, you're going to love Master Trader, quite frankly, because I'm going to be teaching about 2.5 hours of just hardcore technical analysis from the beginnings to the advanced. We're going to have a tremendous amount of fun. And for the pro members that get access to Master Trader, they also get access to 6 hours of on demand with that as well. And that's the last thing I'll say before we get into the podcast here. Is great time to become a pro member of Tackle Trading. Go over to tackletrading.com, hit the storefront, and you'll see great time to become one of those annual members of Tackle Trading, as we have kickstarted our financial independence season, and that's why we're doing all these webinars and so on and so forth. So go check it out, become a pro member, do it the right way, and let's have some fun.
Yeah, all right, let's talk a little tariffs. I know tariffs, you just ended with the word fun, and now we're going to talk tariffs. Those two
I threw
words
up in my mouth a little bit there.
Yeah, those two words don't have. Now, Matt, you graduated law school.
At one point in another lifetime, I did.
In another lifetime, I got a PhD in political science. So you and I are not exactly, you know, ignorant when it comes to politics, American government, the law, right? You know, between us, we have a lot of knowledge.
Deep-seated in the justice DNA.
And it was fun for me this week when the news broke midweek on the lower courts basically saying Trump's tariffs, you know, that he didn't have emergency powers. Mm-hmm. And then all of these sections, and we're going to talk about them and outline them coming up. You and I having to break out, basically be little legal analysts, you know, on what all of this meant for a 12-hour period. Be like, all right, so this section, what does it mean? Is the core right? It was fun. And I want to walk through this timeline right now and pick your brain on it. So, you know,
so basically, where are we at in the tariff conversation, and how does this impact the market moving forward?
Okay. Yes, and that's obviously what we care about. All right, so just a little backdrop. So Trump's Liberation Day tariffs, they were launched under the International Emergency Economic Powers Act. Abbreviation for that is the IEEPA, right? And this law is designed to give presidents authorities during foreign crisis, right? Mm-hmm. And so the Trump administration used this law as a means through trade deficits and the flow of fentanyl to say, listen, we have the ability by law under these provisions of the IEEPA to say, to put these tariffs on, right? Declaring a national emergency, it had the legal basis.
Under the Emergency Authorization Act, the president has a wide latitude to handle the tariff conversation, yes.
Now, on May 28th, Wednesday night, the U.S. Court of International Trade, which is a 3-panel court, in a 3-0 ruling, ruled that President Trump did not have the authority that they were claiming to under this act, right? Mm-hmm. What was your initial reaction when you first heard the news?
I guess like everybody, a little surprised. I don't want to say shocked because
And you shouldn't say
I,
shocked, because 2 months ago in this
I
podcast, you said this was a potential outcome.
well, yeah, this was in one of the potential outcomes. I thought it was a low probability at the moment, but it was part of the does I didn't really talk about it from a court perspective, but I talked about it from a congressional act perspective. And so I don't think listeners of the Trade Justice podcast should be shocked at that. Quite frankly, we did have that conversation, but I was a little surprised because it really wasn't on my radar. Honestly, I was sitting there it was Wednesday, and
You were evaluating Nvidia earnings.
I was talking about Nvidia earnings in the moment the headline hit, and I'm sitting in Discord talking about Nvidia, breaking down kind of what to expect on Nvidia, and all of a sudden it hits the wire that Trump's tariffs are null and void here based on the trade court. And so I was a little surprised, but I wasn't shocked that kind of went to the conclusion. I thought the market was a little bit too giddy up and go, quite
because
frankly.
the market started rallying hard.
Well, and the reality was, it's positive for the market, certainly, but it's a court case at the lower level that you just know is going to end up in the Supreme Court. You just know is going to end up in the Supreme Court. And so it's going to go through the process. And so initially I was a little surprised because it was not on my radar, quite frankly, this week. I was so laser focused on Nvidia and what Nvidia meant to the AI landscape and the growth narrative. And are we going to get a breakout following Nvidia? I was fully expecting a power move one way or the other in the NASDAQ on the overnight session. And then when that hit the wire, yeah, it was a little surprising. I thought Twitter was fantastic. I thought Twitter took that a mile, quite frankly, about how that was like the end all be all conclusion. And it's just like
that tariffs were over, right?
It's a step in the process, guys. It's a step in the process. And so I was a little surprised, but not shocked. Initially my head went to, okay, where does this go? How much appetite does Trump have to fight this? Is he going to see this as an out to focus on deregulation and taxation and the big beautiful bill, and because that's going to be a difficult moment getting through the Senate. And so I kind of went through that. Okay, politically, economically, how does this impact downstream? But the simple reality is it's important to understand the conversation. It's important to understand where we're at in the conversation, but it's also equally important to understand that this is going to go through the court process. And we simply do not know how the Supreme Court is going to view the emergency authorizations and Trump's utilization of the emergency authorization that gave him the wide latitude to do Liberation Day and broad-based reciprocal tariffs. Now, what I think people didn't understand in the moment of that headline was because the market kind of took it as tariffs are over.
That was the initial, the Twitter, the market.
That's not what's going on, because the only thing, at least in my estimation, that the court ruled on was the utilization of the Emergency Authorization Act, which allowed broad-based tariffs, the reciprocal tariffs. And so the targeted tariffs, this doesn't impact targeted tariffs. Not in any capacity does this impact targeted tariffs.
And when you say targeted tariffs, aluminum, steel, those type of targeted tariffs.
Well, those go to the sections we're going to discuss, right? So where do you want to go from here? But
yeah, so we have the initial market reaction, and I wasn't following Twitter when that happened, but apparently they were like the same as algos. It was
Twitter had one response: tariff conversation's over. That was the Twitter conversation. Yeah,
maybe projecting everybody's thoughts on that. a
little
bit.
Projection there, I would say.
And so I turned off my computer. I fully expected, because I was like, I'm gonna, talk to Matt, and then I'll see price action tomorrow and adjust. Mm-hmm. Now, when I woke up, price action was kind of muted, right, and sold off a little bit, kind of glided off during the day. Didn't have that robust trade war was over. Now, Goldman Sachs had put out an article, in the night saying, listen, this does not mean maybe what you think it means, right? Like the trade war was over. And they listed out, and this is something they listed out a few things, and then we've done our own research to look at other things that, like, even if the courts rule against, which we don't know, and we'll talk about where it's at in the courts here in a second, but even if the courts rule against the Emergency Powers Act, the administration, if it wants, have some other tools at their disposal if they want to go forward with tariffs. And so we're going to list out a couple of these legal things, Matt, and one of them is Section 122. Now, 122, and I'm very curious about your take of this is a serious option from the administration and what it might mean from a market perspective. So Section 122 of the Trade Act of 1974 allows the president to impose temporary tariffs up to 15% for 150 days. Does have a cap. 150 days is the cap, 15% is the cap, but appears to have like wide ability for the president to do this for basically any reason they want. What do you think about that potential outcome here if the courts do rule against Trump?
Well, I think step one is to certainly kind of walk it through the court process. I don't anticipate this to be a lengthy court process. We're talking about some extremely important economic situations and some time-sensitive situations as well. You saw an injunction the following day because there's very important trade deals that are currently being negotiated. Earlier this week, I think there was 3 trade deals that were pretty much ready to giddy up and go in the moment. There's also a lot of other trade deals currently being discussed, and what the court did, whether the court is right or not is not the point of this conversation. But what the court did kind of threw a little bit of a damper on those negotiations. You heard Bessent say pretty quickly right after that was having a little bit of an impact. And so when you're step one is to kind of watch this go through the court system. And I am fascinated by watching this go through the appellate process. I am one of those geeks that geeks out on Supreme Court stuff. And so I'm fascinated to watch this go through the Supreme Court. But at the end of the day, that's going to take care of itself, right? And it's going to be interesting to see how the Supreme Court does rule. The panel ruled 3-0. The appellate court put an injunction in place. The injunction in place has nothing to do with the 3-0 ruling. And so I saw a lot of people be like, well, the appellate court stopped the trade district court. And it's like, nah, this is just the process of getting it to the Supreme Court.
Yeah, and Matt, we just walk through like
and in the Supreme Court. There's no doubt about that.
Before we get in these sections, since you're touching upon it, like, most individuals, I don't know if most, but I know not everyone is like, how do these work? These appeal processes, right? So you have one lower court say something.
Well, you have a district court say something, and then the party that usually doesn't like the ruling has the opportunity to appeal it through the federal system. And so it will go to the DC Circuit Court, and then as it goes through the appellate process, that will be a very quick process in my estimation. We're talking about presidential acts here. We're talking about macroeconomics. We're talking about things that impact on the scale of the entire global economic system. So I would assume that the Supreme Court and the court system understands the importance of the speed of this conversation. But I do think that step one goes through the appellate process, ends up in the Supreme Court. The Supreme Court will rule on the case. They'll either affirm the initial district court's ruling, or they will, which basically stated that the role of tariffs relies, you cannot act in conjunction without Congress. In the Constitution, it's very clear Congress has the authorization over tariffs. And so that's what the district court, the trade court ruled. It's going to go through the federal appellate process. It's going to end up in the Supreme Court. After that, though, regardless of how it lays out, I mean, that's going to take a little bit of time, not too much time. But after that,
so you expect that to be a pretty speedy process relative to everything?
Weeks, not months.
Not months.
Yeah, weeks, not months. These are extremely serious conversations that have an impact on trade deals. If the Supreme Court doesn't force this action fairly quickly, I would be very, very surprised. And so, yeah, I do think it ends up in the Supreme Court. I do think they rule. And quite frankly, I would say that the Supreme Court probably try to find a happy medium. That's what they've been trying to do, but they most likely affirm the district court's rulings because the United States Constitution is actually quite clear on this. So it does come into account. It will most likely take into account what does Trump have the ability to do on the tariff side of the equation with these sections. And he asked about Section 122, which gives the president broad authority to lay up to 15% tariffs across the board, universal reciprocal type across the board, up to, I believe, 150 days. And I believe that number is 15%.
Yep.
If you want to go further than that, you need congressional authorization. And so does that allow Trump the negotiation that he needs? Because that's what this is really about, Mark, is putting pressure on these countries, forcing them to the negotiation table so that the president can negotiate new trade deals moving forward. Does that threat of the time conclusion of that Section 122 allow Trump, the president, to put the pressure that he needs to put on these other countries? That's an open question, obviously. To me, the current effective tariff rate is about 12%. Trump has the ability to go up to 15%. I think that allows him the authority necessary to go out there and negotiate these trade deals. So I do think they would certainly look to use Section 122. But I do think that is seen as Plan B. Yeah, absolutely. I think they want, Trump more than anything wants the ability to go hit hard and then come off it. And I know the X-verse and the Twitterverse is doing all the taco trade stuff, but that's his negotiation style, to go in there and hit somebody
in his first administration,
and then to pull it back. And so it's part of that negotiation style. And so I don't think that Section 122 allows that type of negotiation style. So obviously that's going to be Plan B. He wants the Emergency Authorization Act, because that's no limitations on whatever he can do. Section 122 certainly has limitations. Think about Section 122 versus what Trump's doing right now as somebody buying a stock versus somebody buying a call option. You buy a stock, guess what? There's no time expiration to that. You can own that stock forever you want. You can do a lot of longer term things. You can take your time. You buy a call option with 2 months expiration, Mark, you don't have all the time in the world to do everything you need to do. And so that's kind of like the utilization of Section 122 versus the emergency authorization. So I do see the 122 Act as certainly Plan B in the overall tariff conversation.
Yeah, no, and so some of the thought process, Matt, is that they use 122 to get some temporary in place, and then they use Section 301, right? And this is where, on a Wednesday night, I did not expect to be studying trade law, right? On that, and we'll talk about this in the newsletter, outlining, kind of giving a dummy's guide to trade acts of the
last. Well, they're already using 301.
And they've used it in the past, but the thought process is, all right, if we want to do more, use Section 122, and then 301 gives the administration the ability to authorize investigations into trade practices of other countries,
which have already been ongoing. And we're talking about China and IP theft, and that's what Section 301 is about. And so Section 301 is basically unfair trade practices. And so with China specifically, that's one of the biggest hurdles in any trade negotiation, is not how many goods are you going to buy of ours and what are we going to buy of yours? And it's the other things. It's the IP theft. It's the currency manipulation. It's those types of restrictions. It's that. And so Section 301 has already been utilized. There's already ongoing investigations. Trump can certainly authorize further investigations into unfair trade practices. You can do it on the EU, but that is a step. And once again, when you're talking about the Emergency Authorization Act, that allows you to do whatever you want. When you're talking about using 301, you have to go through the investigation route. And so it's just another step in the process, and we're already using that. But 301 cannot be used from a broad-based perspective. 301 is a very specific
targeted
towards what we see as unfair, unethical practices in trade.
Yeah, and then there's Section 232, which you talked about the specific things on steel and aluminum that were not impacted by
chips, steel, aluminum, national security issues. Yeah, and those are ongoing as well.
That section does not require congressional approval. Hence, the court basically said no,
because in Section in Section 232 and Section 301, those are utilized for targeted tariffs. We use those for targeted tariffs to target certain industries, certain unfair practices. Trump used those sections in his first administration. Biden continued those utilizations in his administration. Trump has been continuing it in his second go around. So that's nothing new. It might be new to the conversation for a lot of people right now because it's out there in the public, but it's nothing new. Ultimately, the question really kind of centers on the tariff side of the equation. Is if Trump does not have the emergency authorization and the ability to use it as a negotiation hammer, if he doesn't have that, does Section 122, which allows 150 days of broad-based tariffs, does that allow him to get the negotiations done? And that's an open question. So step one is to walk it through the court process, which there is an injunction right now that allows the tariffs to be ongoing. Step two is to if the Supreme Court rules that the district court, the International Trade Court, was correct, then you're going to talk about utilization of 122. But at the end of the day, you have to see what happened this week as some degree of alleviation on the tariffs in general. It's just going to be a little bit of time before we have some degree of actual conclusion on this tariff conversation. And that might be the last thing I say about tariffs in the Trading Justice podcast for the next few weeks, because you can put me right there with absolutely everybody else. I think it's important to understand these sections. I think it's important to understand how they can get utilized. But to me, I'm so sick of the tariff conversation. I always think about Coach Frank when I'm talking tariffs with you, because I'm always thinking, I just want to talk about technicals. But you got to have the understanding of the macro. And so I am glad we had the conversation, but I'm ready to move on.
Yeah, let's go look at those technicals real quick. A little bit of volatility because on Friday, getting another negative, like China not playing ball. Bassett said talks are going slow, right? Not a broad-based tariff conversation, more of a country-specific. Right, you've had the Stephen Miller out there talking about how that Trump made a social media post weighing on the market. Not a lot different than we saw last Friday when we saw the European Union 50%. Right, so we might be sick of it, but it feels like the tariff is going to be part of the conversation. But let's look at those
until the Supreme Court rules. It's going to be a big part of the conversation. After the Supreme Court rules, then it'll start getting cleared. But the problem isn't having tariff conversations for the market. The problem is the uncertainty that
I was literally going to just ask you about that.
That the court brought in this. And I'm not saying the court was wrong. That's not my take here. What I'm saying is that what the court did, and now in the environment we have, it adds a level of uncertainty to the market. And when you go out to the marketplace and you look at the market from a technical historical perspective, Mark, well, why did we start the downward movement in the first place? Not Liberation Day, but the downward movement. It was the concern about what was going to transpire. And now after we've seen kind of the last couple of days of pricing, you kind of have a little bit of that same concern that the uncertainty now is brewing again. And as that uncertainty builds again, we're starting to see price change a little bit here. And so that's the one concern. And so to me, I think the message to really kind of the Supreme Court, because I don't blame the president for, appealing the court ruling here. And I certainly don't blame the president for wanting to take it to the Supreme Court. And I don't blame anybody for using the court system for the reason the court system is there. What I will say, though, is the Supreme Court needs to understand that the number one thing that drives market participants absolutely blank crazy is uncertainty. And that's what this conversation did this week. There was much more certainty with where the path of tariffs were.
I think
because,
Mark,
even though
point.
There was an ongoing negotiation and Trump would use that to push that tariff conversation, at no point in the last 3 weeks in conversation have I felt like I like there wasn't going to be alleviation on this conversation, that I felt very comfortable with where this negotiation was going. I felt very comfortable in terms of my understanding of what Trump was utilizing in the negotiation. This throws a variable into that. How does Trump respond to the court now? How does the court process go? What's the timeline in the court process? And so anytime you want to add the legal system in an economic conversation, I'm going to tell you the market doesn't like that. And so I'm just going to suggest that the Supreme Court needs to understand the urgency of this moment, because the markets are going to have a difficult time, in my opinion, as long as this cloud hovers the market, because Mark, it's not necessarily the tariff conversation.
When you're out there having to Google section 122 and section 301 and then game theory, what that potentially might mean, right? That is not exactly.
If the market's having the conversation that we are having today, next week and the week after, we're not going to be dealing with a beautiful bullish uptrend.
And that's the drop right there.
Yeah,
right there, right? And we'll see if the
Linda,
Supreme Court...
is it accurate the U.S. Court of Appeals orders President Trump's tariffs reinstated while the appeals process? Yes, that's what the injunction is, Linda. And so Trump appealed it. The Court of Appeals put an injunction in place. Tariffs, nothing has changed up until the Supreme Court. And so, but we know the uncertainty is building, because yes, nothing is changing as of right now. But the Supreme Court could be the ultimate roller on that, and that could be soon. So that is accurate. The tariffs currently, or at least the court ruling, there is an injunction there. Absolutely.
Now, man, we got a nice little consolidation pattern. Holy cow, we got consolidation patterns in lots of areas of the market. When I look at this consolidation, and give me a little preview in the Tackle Trading newsletter, literally a reason to be a pro member. If the only thing, if it wasn't attend all the shows and interact with the community and scan report, if all you did was read Matt's technical analysis piece that he writes once a week, right, it is worth the price of admission. It is fantastic. As a consumer, I look forward to it every week. Matt, give us a little preview on the technicals as we head towards the end of the week.
Well, last week we were dealing with a little bit of a bullish flag-based pattern that was confirmed earlier this week, but yesterday's pricing, and that's why the ultimate conversation on the tariffs and the impact on the overnight action on Wednesday and it coming right back down here today, that's important here technically, because you're dealing with a little bit of a fake out right now against the market. You can see it on the NASDAQ a little bit more pronounced as the market tried to break out not yesterday, but on Wednesday following the tariff announcement, have a little bit of a fake out candle. And so you're coming right back down. That's going to put a little bit of a damper on the market from a technical perspective, because unlike last week where you could just kind of anchor against the 200-day moving average and a pullback against an increase in support, now you're dealing with a little bit of fake out. You got to take that into account. And so I'm definitely going to be writing about consolidation patterns, K-trade analysis, because that's kind of where we're looking right now.
And K-trade, for those that don't know what that means, K-trade is...
K-trade analysis is basically when you have a short-term consolidation situation on any time frame, whether it's an intraday pattern or a daily pattern or a weekly pattern. It's when you have short-term consolidation and the market doesn't have an edge one way or the other. Last week, the bulls had the edge. The week before, the bulls had the edge. The week before that, the bulls had the edge. But this week that changed, and that changed on Thursday following the Wednesday overnight price action from the tariff announcement to Nvidia's earnings report. And so you now have a little bit of a fake out situation, and that creates a K trade where you're saying it's really crystal clear on the NASDAQ. It's not as crystal clear on other indexes, but basically what you're saying in the K trade is, all right, I don't have a strong opinion in the range, right? Say the range on the K trade on the NASDAQ right now is 2,100 up to 21,500, let's say it, right? So you have a 500-point range on the NASDAQ right now. That is an intraday range that day traders are going to dominate. And as long as that range stays intact, the day traders are going to look to be buyers at 2,100, and the day traders are going to be looking to be sellers at 21,500. Well, as a swing trader, as a position trader, as an investor, you shouldn't have a strong opinion within the middle of a range in a K trade situation. You think about it from a breakout perspective, and you're open-minded to either side of the equation. And so that's what the K trade is. It's simple consolidation where you could truly analyze and expect either the market to break out of resistance or break down out of support. And that creates the K trade because you're expecting movement very similar to a symmetrical triangle, but it's more of a consolidation pattern.
Yeah, no, looking forward to that. And, and Matt breaks in, different indicators, different analysis. It's fantastic. Seriously, worth the price of admission.
Probably talk a little bit about divergence today from an indicator perspective as well. That's been on my mind.
Well, I love it, like seriously, because I let you do the heavy lifting on that, and I just like read it as a consumer. I love it every second. And Matt, these consolidation patterns, I see them in gold, I see them in silver, I see them everywhere right now. Like it's just a lot of consolidation out there in a lot of the major areas of the market, isn't there?
Yeah, there is, quite frankly, right now, as the market has recovered a lot of the drop in from Liberation Day. The ultimate question is, can it get into that all-time high and then eventually break that all-time high? You're going to need a growth narrative to be able to do that. I'm not sure we got that growth narrative this week. I think we got a little bit of dark clouds this week. And that dark clouds, i.e. the uncertainty, certainly does lead to a little bit of consolidation. But consolidation is usually calm before the storm, Mark. Yep. And so I like consolidation. Theta traders love consolidation. Some day traders do, but most traders like and prefer a trending environment. And so consolidation is, I call it the calm before the storm because usually it does precede a trending environment. So you take a look at silver, for example. Yeah, absolutely consolidating on multiple time frames here. But you break out at 33.70, well, you're breaking an intermediate resistance range that most likely goes into 35. You talk about the S&P 500 and it's or the NASDAQ will say it's got tight consolidation, but you break back out of that 521 level and you close above that level. I think you got to be ready for the NASDAQ to punch up into 540. And so, yeah, consolidation happens a tremendous amount. It certainly is happening here in the market right now. And that's why I think you got to prepare for K-trade analysis.
Yeah, no, look, once again, I've said it twice. I'll say it 3 times, then I'll shut up. Like that newsletter, Matt's Technical Breaks. And the one thing about consolidation that I love, one, as a theta trader, these environments tend to be pretty decent for credit sellers such as myself. But they also provide levels that are pretty easy to identify, and then having an action plan when either the bull or the bear breaks, right? Don't pick a side till the market picks a side. They become very you go first environments, don't they?
Yeah, they do go very you first environments, but they're also like, it doesn't mean there's not great trades out there. Like consolidation in the market means the net average of every stock we're looking at in the 100 stocks on the NASDAQ is average. The average of the 500 stocks on the S&P 500 is average. That's what creates the consolidation. Mark, that doesn't mean there's not great uptrends out there. That doesn't mean there's not good bearish downtrends out there. It just means from a market perspective, the market is not providing you a headwind nor a tailwind to help your trade that you're looking at. It's a stock picker's market. There's still great trades out there. Not everything is consolidating, but in general, the market is.
All right. Curious on your take on NVIDIA. Let's get into stocks in the news. NVIDIA, like in another world where we didn't have lower courts having us do legal research for 12 hours this week, we would have led with NVIDIA. We would talked about NVIDIA and its impact on the growth narrative, right? Because coming into this week, and this is something that you have highlighted in the podcast for several weeks, is like, all right, I understand the stability. Where's the growth argument, right? From the bull side, like we need a growth argument and we need something to excite, something to push us higher. NVIDIA potentially providing a spark. It has before in the market over the last couple of years, right? So you wouldn't be surprised. NVIDIA reported their numbers. I call you up and your take on NVIDIA, which you wrote about and the importance of this last week in the newsletter, right? I was very interested in hearing your take in our community, and we share your take on NVIDIA's earnings as a whole, where you thought they did well, where you thought they maybe wasn't as robust as the headlines might have suggested.
The headlines did suggest robust, and Nvidia. There's an unfair comparison on Nvidia's earnings. Nvidia oftentimes gets compared against everything.
Yes.
Everything is simultaneously, right? Versus no other company in the market has that type of comparison when it comes to Nvidia's earnings. But the reason we have that type of philosophy with Nvidia's earnings is because when you look at from the super cycle announcement in May of 23 through the Blackwell chip announcement later on a year later to now currently today, what you are seeing is an expansion, no doubt about that, and nothing I'm going to say here changes that long-term projection on Nvidia, the AI space, all of that. But the concern going into Nvidia's report last week was the slowing growth narrative. And specifically, does the headwind on China, is that more pronounced than the tailwinds of the sovereign investment build out, for example, or the hyperscaler build out with the additional news of XAI? Well, couple things that we saw in their earnings report. First and foremost, they came in with a miss. I know there's a lot of reports out there that came in with a beat. But they officially did come in with a miss. Expectation was 85 cents. They came in at 81 cents. Some like TradingView's earnings update has it coming in at 81 cents versus 76 expectation. That will suggest it came in with a beat. I'm not arguing one way or the other. What I will say is it's not beating by an average of 13.6%, which has been the average beat in the last 8 quarters. And so EPS has been a dominant argument at Nvidia. They gave that argument a little bit in this report. Secondarily, the average guidance beat over the last 8 quarters has been over 12%. Well, Mark, in the last 2 quarters, guidance was increased by 1.7%, 1.1%. 3 quarters ago, it was 2.3%. Depending on how you see guidance, and NVIDIA's guidance is all over the board, the guidance expectation going into the report on Wednesday was 45.9. So the guidance expectation was 45.9. They came in at 45. That's actually a 2% drop in guidance. And so that was the first drop in guidance we've seen in quite a bit of time. And when you look at that guidance, I can't not see that China headwind in that guidance, Mark, because not only did China headwind impact $4.5 billion in chargebacks in the quarter, China headline actually impacted NVIDIA's guidance by $8 billion.
No, and this is one of the reasons
on
negative China headlines today, markets down, semiconductors down noticeably, right? Because of this, just the fundamentals here involved,
Listen,
right?
Without the China headwind, you're talking about a super cycle. Like legitimately, you're talking about the May 23 report where you're just seeing robust guidance increases, robust EPS beat. You take away the EPS, the 4.5 billion charge on China on the EPS beat, you're talking about a massive EPS beat here. And so context, I think, does matter. When you just judge the raw numbers out of NVIDIA, miss on EPS, beat on revenue, and a 69% increase in revenue year over year. Those are good numbers. Profit margin was in the 73.5. That's really, really, really good. No company can compete with that. So raw numbers, pretty good. Expectations against those raw numbers on guidance and EPS, lukewarm. So that context matters, right, on the China headwind. The ultimate question coming into the report was, can NVIDIA create the super cycle narrative? It's going to be tough as long as we're having that massive tariff debate. It's going to be tough. But as things do get alleviated, there is that argument underneath the surface. What I think NVIDIA got right in the quarter, data center revenue surged 73%, and there is absolutely zero anticipation that is slowing down. The sovereign build out is going to do nothing but help that data center build out. The hyperscalers and what they're doing from a capex spend, going to do nothing besides help that data center build out. Mark, we're talking about sovereign governments now understanding that they have to build AI infrastructure. That is a massive growth narrative out of NVIDIA, because who else can provide the resources and tools necessary for these governments. Mark, we're not talking about corporations adopting. I'm sorry, there is a difference in narrative when a sovereign government supports an infrastructure project versus when a company does. When the United States government says we're buying something, that's a little bit different than when XYZ company says it. And so what we saw out of the Middle Eastern build out with UAE and Saudi Arabia and whatnot, we're going to see that out there in other countries as well. And so I think what they got right, the data center build out, and which is NVIDIA is all a part of, that was up 73% year over year. And I anticipate that actually extending due to the US hyperscalers and those sovereign AI deals. Blackwell chips now shipping out there as well. Blackwell's a strong build for NVIDIA. They're out there shipping and they kind of anticipate that that next upgrade cycle. Quite frankly, AI demand is broadening also outside of just the hyperscalers, Mark. We're starting to see that demand coming from lower levels. Remember, in the first couple of years of the AI build out, it was only dominated by Apple, Google, Amazon, right? Those Meta, those hyperscalers that were putting billions and billions and billions and billions of CapEx. Now we're seeing companies in healthcare. Now we're seeing companies outside of just the hyperscalers. We're seeing it in industrial. We're seeing it in energy companies. And so that AI build out is expanding outside of just what we're seeing in the technological era or areas of the market. Robotics. Oh my goodness. Jensen was hyped up, excited, and ready to
I thought he did a
robotics.
To a non-earnings, consumer, I thought he did a fantastic job of
Jensen's
pumping
a rock
up
star.
the future. Like
he's a hype star.
He's just like getting you excited where you're in the audience and just
he must have taken some mentor notes from Elon, because that's what Elon's been doing for
seriously,
15 years.
You could have went from AI is going to destroy the world to listen to Jensen be like, yes, bring on the robots.
He knew he was going to have some issues on the guidance. He knew he was going to have some issues on the raw numbers. He knew people like me were not going to be happy with those raw numbers, even though NVIDIA compared against anybody else, it's night and day, quite frankly. Yes. I'm judging NVIDIA based on NVIDIA's own standards. That's what I'm judging it on. I'm not judging NVIDIA based on AMD, because if I did, I would just say terrible things about AMD and I would just love on NVIDIA. We have to understand these narratives moving forward because they are important. If everything was just gravy out there, guess what? NVIDIA would not have gapped up and sold down. And so we got to understand these things. But what he did do to offset some of that China headwind impact was, man, he got us all hyped up on automation and robotics and how NVIDIA is positioned so well to thrive in that environment, Mark. After listening to the conference call and what Jensen had to say on robotics, automation, and everything on the sovereign build out, NVIDIA is a $3.5 trillion company right now, Mark. By 2030, it's 7 to 10 trillion.
Yeah, no, I mean, there's so much.
I'm buying into the massive growth.
I totally listen. I'm a crabby bear, right? I was there like pumping hedge funds last week over retail, but I'm totally into this because I think this one's easy long term.
Yeah,
right?
I want to chase NVIDIA on anything on the top side, like on the investment. That's more of a trader's conversation. But if NVIDIA starts going down because of market concern, because of the tariff conversation, we get dips. I think there's a conversation there.
I think there's a big conversation there. All right, next, a lot to unpack on NVIDIA's. You did a great job for our community this week. I'm a dip buyer, right? I think volatility played out, blah blah blah. But I'm totally in.
Please be clear on the dip buying, because I've been dealing with a lot of day traders recently. So you're talking lower levels, obviously, correct?
Yes.
You're not talking a 9 EMA gap fill on the earnings, which we're going to see. Okay, because me and Frank will basically say, "Give me a doji," and we'll break down a swing.
When Mark says dip buying, he's like talking 15.
Sometimes I just need to make sure that the audience understands what you're talking about.
Yeah, ever since the pandemic, dip buying is 0.5%.
When you got the momentum, it is. Market doesn't have that momentum right now.
I don't know if it has that momentum heading into next week. All right, next stock story Salesforce, I want to talk about why the market hates Salesforce, right? Like, I thought their earnings were decent. I liked their acquisition. They had a lot of news in the week. They, delivered earnings. From my just basic eyes, they looked solid enough. I like their purchase. They don't go out and do splashy purchases very often. They went out and bought Informatica for $8 billion, their largest purchase since Slack Technologies. Salesforce is one of those companies that I personally respect the management. I think this is a stock I trust. It's a management team I trust. It is a product line I trust, right? This is a company, and boy, they, even before their earnings, Matt, they were sliding heading into their earnings. What was your take on the Salesforce earnings data?
It was a walk in the park earnings report. They didn't inspire anybody, and they shouldn't have made anybody that concerned. But the market gapped down on the news. Salesforce just out of favor with the market. I don't have a strong take on their earnings. It was a walk in the park. Wasn't paltry beat, and there wasn't anything really to anchor on the bull or the bear side in my estimation. So I don't have a strong take on.
Is there a little bit of IBM going on here with Salesforce?
You're putting Salesforce into the big blue, huh?
I was like, well, we
might as well just throw Salesforce into Intel, IBM, and let's just call it with the dead tech stocks.
Well, you know exactly what
I know exactly what you're talking about. Of course I do. Yeah. They better start paying a higher dividend.
And once again, it's, nobody's going to get excited about that, but, like, I like stability, right? Like, that's, I'm a big fan, but it does.
I don't know if I would describe Salesforce as stable. Like we're talking about a company that going from 220 to 370 back down to 260. I wouldn't call that stable.
That is an exciting little ride, but I just, as far as like, I guess my belief in the company and so forth, but I do feel like there's a little bit of IBM going on here with Salesforce, which has me hesitant and certainly requiring, stable technicals, which we do not have as we head into the week for sure. I want to talk about a sentimental favorite of ours, Elf Beauty. Elf Beauty, just with the teenage daughters, right? You and I have over the years talked about Elf Beauty and their product lines and this and that. I mean, it's one of those like weird little stocks that you and I just from like, consumer basis know a little bit. They had earnings this week. They also had an acquisition this week, purchasing, what was it? The makeup brand, Hailey Bieber. And that is Justin Bieber's wife, right? Like, I know I'm a 53. So. Yeah, I believe that's Justin Bieber's wife. Buying her brand for $1 billion, making it Elf's largest acquisition ever, right? So largest acquisition, came in with earnings. What was your take on earnings, the acquisition, the Elf chart in general?
I thought Elf had a good earnings, a little bit of an 8% beat against EPS, beat on revenue. They didn't provide guidance, but they had the acquisition news that obviously was celebrated. And the Hailey Bieber's brand started in 22, sold revenue 200 million last year. So obviously a massive growth story. Elf acquires them. I like Elf's turnaround story here personally. I want to chase their earnings, put it on a secondary target, but Elf's got a pretty decent little reversal V-shaped style playing out here. Obviously 50-period moving average, so I'd be putting it on the give me a little bit of a pullback type situation. But I did like Elf's earnings report. Now, you had a couple other reports out there this week, Ulta Beauty in the space too. And I would say Ulta Beauty had a slightly better report in general than even Elf Beauty did. But I would say both of them had a pretty decent report. The only difference is I kind of like Elf coming from the lower point on the chart than what Ulta Beauty is doing, and that probably needs to see a little bit of a gap fill, as that looks like an exhaustion type gap. Estee Lauder, the forgotten child of all of them, still is the forgotten child of all of them. This is an Elf versus Ulta Beauty conversation, and my daughter says Elf, so I say Elf.
Yeah, four stock story. I want to lump a few together, stick with the retail theme. Now, Matt, one of the things that we've seen over the last few years, people will occasionally bring up consumer weakness, they'll bring up this. But what we see in retail numbers when they report is some haves and have-nots. Some companies do well, some not. Not seeing broad-based consumer. We haven't for years. This is something we've talked about many times over the years. And so we had a lot of retail companies report this week. We had Abercrombie & Fitch, ANF, report this week. Right, gap up, try to sell off. Numbers weren't too shabby. We had Gap itself, kind of living up to his name, GPS. Do. You know, big. You have to look closely at the candle. It's down there at the 200-day moving average. I had to find it with my eyes there. It's like, where is that? She went somewhere.
You certainly showed your age on that one there, brother.
Like,
should I get your bifocals on?
Yeah, no, yes, okay, fair enough, right? But I literally was like, where's the candle? I know it. Yeah. Oh, yeah. It's way down there. We had Best Buy. We had Costco. We had a lot of retail numbers. And Matt, what I saw out of the numbers, and you can give me your take, is I saw, generally retail spending do decent. Costco's numbers particularly stood up on the, consumers are spending. And then I saw like things like Gap or Best Buy say, listen, we have some tariff related potential drawdowns related to tariffs, but not the consumer, man. And we had consumer confidence come out this week, improve. And this is something you say all the time, and I love it when you break out the line, about what consumers say with their mouth and their wallets oftentimes paints two different pictures, doesn't it?
Consumers have a lot to say, but truth is in what they do.
And so, any takeaways from the retail earnings reports?
No, it sounds like you got a little bit of a stronger take than I do. I thought Costco had a decent report. The raw numbers of a lot of these earnings reports were good. For example, Abercrombie and Fitch had a really good report from an EPS revenue perspective. Like you said, consumers are still spending, but you got to finish the thought on Abercrombie. You got to finish the thought on Gap. Their guidance did not reflect that. Their guidance was lowered. Abercrombie and Fitch lowered guidance by 5%. That's why you gapped out on a really strong beat, but then you started coming right back down when you start talking about the future. Remember, the market always is a reflection of the future price. It's not a reflection of what it has been done in the past. It's not even a reflection of what's happening today. It's a reflection of how we see all this information and how it's going to impact the future. And that's what guidance is all about. And so Abercrombie had a great report, bad guidance, gap up, come down. I'll tell you right now, I will like a doji on ANF, though. I like the technical position.
Yeah.
And so in general, I would describe that as a mixed report, basically. And in general, I would describe retail environment as extremely mixed right now. For every Costco you had a gap this week. For every ELP you have an Estee Lauder. So there's haves and have-nots, and it's going to be a stock pickers market moving into the future. And so, for me, looking at the overall retail environment, not that interested in the retail environment, quite frankly, right now. I will be interested in a technical reversal on Abercrombie and Fitch if it dojis, though.
Yeah, I know you and Frank do such a fantastic job. Like, in retail stocks over the last couple of years, being like, no, this technical situation is really superior. This one is not, right. There's been a lot of being able to do that stock pickers on both.
We've got a couple trends on ANF.
And that's the thing. It's like, and this is why
it's an ANF specific comment.
You guys have done this on a few, right? Where
there's a couple like retail companies.
And you catch one trend in a stock, in a retail stock, it's worth all the time investment in the world paying attention to those charts, because when a retail stock catches hold, man,
that trend was just gorgeous on
like
ANF.
And so many at Tackle Trading caught that, and so you're paying attention.
And ANF hasn't really been on the radar ever since that. So I am interested to do another ANF trade, but I want to see a doji. I want to see an upper move to price, but it is not anything outside of a trade conversation. And I would not embrace anything outside of a trade conversation on retail.
All right. And final fifth story before we get into our final segment. GameStop and DGT, Trump Media, got companies out there trying to do their best micro strategy impersonation. GameStop, started their Bitcoin purchases. Trump Media announced, I think, a $3 billion, $2 billion through stock and another $1 billion through other financing to start purchasing crypto in general, right? This has been kind of this little mini trend that is starting to emerge. MicroStrategy, obviously, Michael Sayer, the big one who's like, hey, listen, we're just going all in on Bitcoin, starting to see other companies. What do you think about this trend specifically? Do you think it has any chance of separating out these companies into something else? Or do you think,
No, I think anybody can just go buy Bitcoin themselves.
and so so you're not a fan really of
That's my entire analysis on it.
Yeah. So, I know it makes some headlines and some interest, how much of the pivot. But if you were running,
do I have to buy U.S. Treasury reserves so that I can own some of the gold they own, or can I just go buy my own gold?
Okay. Next time I'm just going to bring up Boeing as the fifth story to spite you.
Listen, I get it. There's a lot of people talking about the Bitcoin proxies and the whatnot, and I know it's a fad to MicroStrategy. MicroStrategy proved out to some degree of success. Does that mean DJT and GameStop are going to have equal success on that? No, I don't know why anybody would have to own GameStop to get Bitcoin. Okay.
If you ran a corporation, would you purchase Bitcoin?
Yes.
Yeah. So,
but I wouldn't do it from a reserve perspective.
All right.
I wouldn't make my corporation a Bitcoin reserve. No.
All right. You ready to play a game, bro?
But I would own Bitcoin in the company. Yes.
You ready to play a game to close out the podcast?
Yeah, of course.
All right. So I'm going to match Coach's Corner and this game that we're going to play called Stock It or Drop It. I actually had several messages, emails on, hey, Matt, what's your take on this company? And so I was like, okay, I'm going to weave in Coach's Corner.
This kind of like Matt's hot takes moment. Okay.
But this is formulated in a Stock It or Drop It. So you have to, it's a binary choice. You either have to, binary choice.
Okay.
So you either have to stock it, which means you buy. Now that can be from whatever format you want, long-term, short-term trading, right? That's totally up to you, right? How you stock it, or drop it saying, no, I just don't have any interest in any. You got the parameters of the game?
I do.
All right. I actually had more than one person ask your take on Tesla, right? Tesla is always in the news. It could be a perennial top 5 stock you talk about every week. But what's your take on Tesla? Specifically, Matt, what is your take on Tesla? So stock it or drop it. Tesla.
I think it's got to be on the radar. Stock it, baby.
Stock it. Any time frame? Just all time frames?
I don't care what the time frame is. Now, obviously, if you're short term, give me a doji and reassert willpower here. I'm not going to break down technicals on every stock, though.
No, I don't. Just stock it or drop it.
I don't care the time frame. It's on the watch list.
I
do like the game further if it was not open-ended to do whatever time frame you want, because traders will trade anything.
All right. Now, one of the things you have convinced me on, Matt, and this is a debate that I am conceding, right? And this debate started 5 years ago, where you're like, Tesla is not just a car company.
It's not just a car company.
Yeah, you've been on that for years and years and years, and I've been like, well, do they need to make money on? I'm on board, bro. I bend the knee on this one. I'll bend the knee on this one. It's not just a car company. We
until they merge XAI within Tesla.
So you're betting on Elon. That's a good bet.
You bet on the technological build out of Tesla, which is Elon. Yes, but. Yeah. I am approaching this as an investor conversation and a trader's conversation. You can parse whatever you want.
Let's do it. Let's do it. Stock it, drop it, time frame 12 months.
12 months or longer. Okay. 12 months.
12 months or longer. Stock or drop it. Next one.
Stock it on Tesla.
That got a few things. Apple. A lot of people own Apple. A lot of people are always interested in Apple. Stock it or drop it.
Drop it. I got concerns on Apple, couple, and they're all related to technological build outs and China and supply chains and all the complicated forms of analysis on Apple.
Matt, this game is so taking hold because I get you out of your trader's brain into your investing fundamental.
That's not what you did. You're like, hey, give me the day trade to the investor analysis.
No, we're doing this.
Apple has issues regarding the supply chain. They're obviously in the political crosshairs of the Trump administration with the iPhone manufacturing coming home to the US. That's not going to happen. it's going to be interesting to see how that plays out. They just got so much tied to the international supply chain in an environment where that is obviously a concern. But even remove that concern from it, we are going through one of the most important technological build-outs in all of human history. And Apple doesn't know how to develop a damn thing. Now, when that technological build-out is efficient, Apple knows how to come in and wrap some beautiful marketing messages around some beautiful products to be able to sell services and products to everybody.
I love this. This is a permanent. I love this take. All right, next one, C3AI. Stock it or drop it, Matt.
Stock this bad boy on any gap fill or high base, baby. It's C3 came out with one of what I would describe a pretty decent report in the AI side of the equation. That a decent beat on EPS. They came in at a negative 16 cents, but expectation was well worse than that, so a little bit better than expected. They actually increased forward-looking guidance here. C3 AI C3 is one of those companies that is a pure AI conversation. And obviously, it's volatile following the earnings release. But I'm going to stock this one. I think you put it on the watch list. You wait on a secondary pattern, and holding period 12 months on a company like AI might be a little bit aggressive for me. But I'll say stock it.
All right, I got two more for you. Roblox, Matt. You don't spend as much money. I don't spend as much money on Roblox as our kids have gotten a little older. Stock it or drop it.
I'd have to go and look at a little bit more research. Honestly, I have not been researching Roblox as much.
Because you don't spend as much money on Roblox as our kids got older.
It's true. It's true. I've been thinking more about Disney because that's where my child is right now today, enjoying her nice little birthday. So happy birthday, sweetheart. Love you, miss you. Can't wait till you get home. I'm going to have to say stock it based on the technical one, but I would say it was just a tradable pattern. I would not, if holding period is 12 months, I wouldn't be chasing this. It's a growth stock that is completely overextended. You'd have to wait on some degree of pullback here. So I'll say drop it based on an overextension conversation. Technically, it's a good tradable setup though.
All right, last one, AMD. Stock it or drop it. This one, I was like,
12-month holding period. I'm going to say drop it.
This is the one I was wondering about. I was like, I pretty much know what Matt will say on these. I did not know on AMD. All right, talk about it.
I'll say drop it. I like Nvidia post earnings more. I think you got to like Broadcom post earnings more. You got some interesting technical situations happening on Marvell and on semiconductor. And so on the reversal side of the equation, you really got some competitions between AMD on semi and Marvell. I think both Marvell and on semi is a little bit cleaner in their totality of the reversal. And I don't think you have that much of a different opinion on AMD versus those other two at this point. I'd have to throw ARM into there as well in the overall conversation. It's Nvidia, Broadcom, and then everybody else. But on the specific semiconductor, I'd have to say AMD, drop it. Too much competition, too much overhead, too much concern.
I freaking love that. We're doing that next week too. We'll probably do the coaching core normal, but we're doing stock redrop. But I loved your takes on those. Matt, enjoyed the podcast. Some great analysis there. You listen to Little Dummy's Guide to Tariffs. I love the conversation on the individual companies. Matt, send us out.
Yeah, if you enjoy the podcast, best way to support the podcast is always a like and share there on whatever channel you are watching the podcast on. And if you're ready to become a pro member of Tackle Trading, no better time than right now. Head over to tackletrading.com, hit the storefront, and become an annual member of Tackle Trading. And then let's go out there to the live events page, which is in the description in the description below. And on that live events page, you can once again see the 7-step guide to trading webinar replay, as well as sign up for the next webinar as well. That's Master Trader on June 9th. Hopefully I see everybody there. We're gonna have a lot of fun talking about technical analysis in that June 9th Master Trader. So become a pro, head over to the live event, sign up for Master Trader, and let's do this the right way. With that said, I hope everybody truly has a wonderful, wonderful weekend, and we'll see you next week at Tackle.
Have a great week, Everett.